All right, sounds good. We're good to go here, right?
Good to go.
All right.
Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
How's it going, everyone? Welcome to another episode of the Amateur Investors. This is already episode 32. Wow, that's pretty crazy, Ben, right?
It's a little weird. I mean, just 20 left until we hit the year mark, the 52 episodes. First
I
goal.
I agree. That's the first goal, and then we keep on going from there. So in this episode, we're going to be doing a stock evaluation about Etsy. Before we get into that, I have a huge shout out to Personify. We're kind of partnered with them. I'm wearing their shirt right now. They sent me a shirt. We're still trying to get Ben a shirt, but that's in the works.
It's a sweet logo.
Yeah, it is. I really like it a lot. It's really cool. So basically, they're an investment company. They've kind of built out an app, and they kind of want to be basically a better form of Reddit for investing. Basically, they have a really cool Facebook group. You guys should check it out. Personify. Let's Invest and Trade Together is the name of the group. So anyway, it's kind of some sad news, but there was a woman, a person in the group, and she's like, "Hey, I just want to let you know, my husband recently passed away, and he left." Left her and her two young kids a large sum of money. I mean, they knew it wasn't hidden. It was just a bunch of money through the life insurance, through the company, through pension, 401k, all that. And it was unfortunate, but she was kind of asking the question hey guys, I have all this money, my job can cover me and my kids' lifestyle. We're not going to lose our house. We're that good. It's a large sum of money. What do I do with this? And I kind of got a little nervous. I'm not going to lie. I just kind of read the thread of what she said. So I click on it. I worried that there was going to be people scamming her or being hey, come to me, or trying to take advantage of her. It was all really constructive, a constructive group of people trying to help her, and obviously they were very apologetic and giving her condolences about her husband who recently passed. And they're hey, we just want to let you know, definitely try and get a CFP, look for definitely a good, a lawyer and a good lawyer and financial advisor. And then a lot of people are saying, be careful with fiduciaries, look for them. But fiduciary is kind of a term meaning that, you're supposed to do the best for your client as if it was your own money. But there's a lot of funny nuances that people can say certain trigger words and sayings that they're not acting as a fiduciary, they're acting as an analyst or a salesperson. And when they're acting as an analyst or a salesperson, they're allowed to sell you things that they wouldn't otherwise recommend to you if they were a fiduciary. So it is kind of a slime ball thing. And a lot of people are I even sent her something list these 10 questions in Money Master the Game, one of my favorite books. Tony Robbins goes into questions you should ask, things you should, if you don't feel comfortable, and all these different things to go through. Even the CEO of Personify was reaching out to her. He's I used to be in the finance industry and I left because of all the slimy things that fiduciaries would do. So it was just really good and, insightful. I wish her and her family nothing but the best. And I hope her and her children's wealth is preserved with the proper thing to do. So yeah, I guess, Ben, we'll get into it, to stock evaluation of Etsy, but definitely check out Personify. Like I said, if you're watching the YouTube channel, I got the logo on my shirt.
Yeah, it's a great group. I think when it comes down to finances, it's always been one of those taboo topics. But I think with Personify, and it's a mission that we share here at the Amateur Investors, is building community with finances and just trying to grow stronger together. So that's great to hear, Chris. That was a good
Definitely.
read.
And I give a word of warning. I mean, there's a lot of times people in the group giving their evaluations of stocks or crypto or whatever it may be. I will just say, do your own research. I know Ben and I always say that at the beginning of every episode. I love the group. I love the community, and people are willing to explain their points or give reasonings, but just don't put all your eggs in one basket, diversify, and, kind of take everything with a grain of salt. So, but it's a great group, really good community there, strong community, and they're willing to help people, which is awesome.
Awesome. Thanks, Chris. So today, like Chris said, today we're going to be doing another intrinsic value assessment. And the company we're going to be looking at today is Etsy. I think the last company we looked at was Ulta. So we kind of keep going out of our wheelhouses here, Chris, in terms of just sector competency. But recently there was some news about Etsy making a big acquisition of the company Depop. And I know that, my girlfriend and her friends are pretty active on the store, or on the app. There's a lot of users where you can really just like show, used apparel, and make your own store. It's very much sort of laid out like an Instagram would be, in sort of the grid layout. So there's a lot of familiarity with the app. I was looking at it before this episode, and it's definitely a smart acquisition from Etsy's point. So I think this episode, what we're going to do is we're going to take a look. I made a little PowerPoint here with Chris, and we're just going to look through just a quick financial snapshot. We're going to go through maybe the 3-statement overview, and then we're going to punch out an intrinsic value assessment. What is the company worth? So for any folks looking at this, if you have any ideas or things you want to challenge about our assessment, always shoot us a line. This is one of my favorite things to do, is when we start doing some screen sharing. It's a lot of fun.
Yeah, definitely. And once again, I know we did this for the last episode. If you're listening to the podcast, it's kind of hard to see a lot of this. So, highly recommend going over to YouTube, giving us a follow on there. That really helps us. Giving us a like, a comment, or anything. And just looking at the visuals that Ben's going to show in the next few minutes.
Yep. And one thing I will say is I'm going to do my best to sort of talk through anything we're sort of looking at. So hopefully we can verbally explain. So Chris, are you able to see the intro slide?
Yep. Looks really good.
Awesome. So cover slide. This is Etsy going public. Always an exciting thing. That'll be us, Chris, ringing the bell with the Amateur Investors logo.
One day, I hope. One day.
Soon. Okay, so Etsy at a glance. Just really, really high level overview. We've got 1.7 billion in annual revenue. These are all 2020 numbers. As of, I think, Jan 1, 2021, there's 41 million active sellers. The market cap, as of, I guess, close of market Friday, Etsy's sitting around 21.1 billion market cap. It's pretty sizable for a company that really I haven't taken a look at too much, but they're the 4th largest e-commerce site in the US, which was pretty incredible. That's something not to scoff at for sure. So let's take a look at how does Etsy make their money, and we're going to go through a few different things. Etsy has 2 other wholly owned subsidiaries as of today, but we'll break that down in a bit. But let's take a look at 2020 sales overview. This is something that I really like to look at really with any company, is how does the company make money? It sort of level sets the analysis of what you're looking at, especially when there is big news. I think the media loves to jump to headlines and to sort of create headlines. You sort of have to tune those numbers, because sort of the law of big numbers, everything becomes meaningless. Defining your sort of sales portfolio, I think, gives a little bit more context to the scale of things. So when you have a transaction, an acquisition, an impact to the business, like let's say, look at Etsy here. We have 1.726. I could have rounded, but I didn't. And in terms of total revenue, let's say that, they were going to acquire Ben Gassaway Industries that makes $100,000. I don't. But if you were to look at that, it's like, oh, that made headlines. Is that a big number? Looking at this, it's not even a percentage. You're not even moving the needle in any way. So I'm kind of tooting my own horn here, but always build out sort of your sales breakdown. So let's look at how Etsy makes their money. Quite obviously, this sort of lavender color here takes the lion's share. That's 75.5%. That's their marketplace revenue. The 2 major constituents of the sales, I guess, portfolio are marketplace revenue. That's 1. And then 2 is services revenue. Now, going into the marketplace revenue, these are the cemented fees. These are mandatory fees. These are listing fees. So posting any item, they're going to make a percentage on that. I think it's in the low single digits, like 1. Transaction fees. So anytime there's a sale, a buy, Etsy's making money. Payments platforms are just being a part of that. And then the offsite ads in terms of transaction fees. Now, going into the services revenue, this is optional sort of like add-on features that Etsy is trying to make sort of an all-in-one encompassing solution for like a small business. Advertising, and that includes Etsy ads and Bump. I'm not totally familiar with what Bump is. I'll need to look into that. What I'm assuming it is it's basically just a little bit of search engine optimization. Chris, I see you kind of like looking and investigating in the background. If you find it, interrupt me.
All right,
shipping labels. And then other is one of my favorite categories in finance, because it could be literally anything. I wish other was not allowed by the SEC, but it's still a category that is allowed. So this is the Etsy, I guess, sales overview. something I also like to look at, and we'll move on to the next slide, is to track this little pie chart. If there's a company that you're kind of looking at to value, I always like to plot these pie charts next to each other. You could do a line graph or what have you, but I think the pie is a nice visualization to see how sort of the portfolio is changing over time. And it's important to know, like for, let's say like for an Amazon or for a Microsoft, like AWS or Azure, those weren't existent a few years ago. So to see those start to creep up into the revenue breakdown, that's something to keep an eye on. So the next thing I like to look at is, did you find Bump by any chance?
I did. So basically,
what do you got?
It's basically when your ad runs at the top of the page. So meaning that like when you go, you're bumped to the top, and for 10 minutes, 15 minutes, an hour, whatever it is, till another person basically outbids you, and then they get bumped to the top for that time bracket. You can always pay more to try and keep getting back on the top of the page, but you can basically buy a spot for however many minutes, hours, whatever it may be, and then it basically becomes a free market economy of people bidding to try and bump to the top of the page. If you get bumped, your ad doesn't fall off and your price does go down, but you'll be on the second page, or you have to scroll down to see your ad, basically.
That's a brilliant business model. I don't think, I doubt that's unique to Etsy.
It's not, but it was just something that I was looking into.
But it's probably a really, really lucrative business.
I'm assuming Google was the first company to really start with that business model.
Like the
basically.
Google ads, kind of like SEO kind of deal. Yeah, I think so too. I just think it's brilliant if you do something native to your platform, just like sort of pay to play kind of deal is just easy money. You don't need to do anything.
Exactly. And they have the user base. Like, I mean, it's like Google. They just have so much traffic that they can start basically bidding their customers against each other to get money to try and get at the top of the page. So anyway, I'll let you keep going with the evaluation there.
Perfect. And feel free to jump in. I'm rambling here, but we'll walk through the financials after this for sure. And more
definitely
line by line. So let's take a look at the competition. And these are some heavy hitters for sure. We've got Amazon, Shopify, eBay. And, you know, I looked at really a list of the top e-commerce platforms, not necessarily just the US. I felt that Shopify does compete on US turf for sure. They've got some skin in the game against Amazon, and sort of fighting that Amazon effect of being taken. So, obviously I think Amazon is a big player. There's always a danger there. But one thing that I think is really beneficial for Etsy's front is, and we were talking about this before the episode, that sort of like handcrafted origin of Etsy. Like they do sell new things and quite a bit of really anything. It's really just like a store seller where you can create your own store, sell your own products, but you can sell also new items and brand name things as well. So they're starting to get into the Amazon space. And I think that's a brilliant idea to take what you can. Because if you already have some customers looking at handcrafted things and they want to buy something new, why not just grab them while you have them? So obviously Amazon, biggest player, we're almost talking 2 trillion market cap, but their focus is not handcrafted. So I think Etsy has some life there. Shopify and eBay, I almost think Shopify more so than eBay. And Chris, let me know if you agree with that. eBay, I think, when I think eBay, and obviously I didn't do like a detailed analysis of these three. But when I think eBay, I think used. I don't really think like sort of a personality seller. I think of just like, I'm looking for an item and I probably won't go back to eBay for a while.
eBay, I think of as like almost like garage selling of items, but basically on the digital market space, basically.
Yeah. And the Shopify, I think, in my opinion, is obviously Depop, but we'll get to that in a second. Shopify, I think, is the most direct competitor where you have folks that can create their own store. It's a really, really beautiful. I am a shareholder, so take this with bias. The really, really beautiful sort of like user interface and storefront for sellers to sort of create their own store. So Shopify is a brilliant product. I think it's Canadian by origin, but the Depop. So Depop is what we talked about before. This is Etsy's most recent acquisition, and that was in their June 2021 investor presentation. So if you want to go to Etsy investor relations and look at that most recent press release and also the investor presentation, you can see a little bit more detail, but I think this covers it quite thoroughly. I'm going to say that. I think Chris and I did a good job. So Depop, what was the acquisition? So the market cap, I'm calling it 1.625 billion because that's exactly what Etsy paid to get 100% of the shares. So that's its market cap and that's what it will be. It's going to stay private. It's a wholly owned subsidiary of Etsy now. 28 million active users. revenue of 70 million, and that percentage growth, that's 100% year over year. That's a really impressive number. And the fact that Etsy kind of grabbed that, what are they? A little over 12. Is that 12x sales? They bought it for. I'm not good at math.
That's why I think so. Yes,
close enough. It's fine. I think they got a pretty good deal with this. If you, I think you have to sort of pay a premium when you're getting 100% growth on the top line. I think that's brilliant. So I think it was a good acquisition. So the competition,
and I definitely think part of the reason they did it was for not just like they didn't need another platform. They were doing it for the acquisition of users, like that they wanted the customers basically is what they were trying to buy.
And truly the acquisition of a competitor. I mean, to be able to take Depop, which in my opinion, Depop on the apparel side is the immediate competitor to Etsy. And in the apparel, like TAM, like the total addressable market, I think is like in the 700 billion. So to be able to get access to that and expand your user base, like you said, Chris, but you also are acquiring a competitor. So competitor, no more. Let's strike that out.
Yeah,
so, go ahead.
I love it. I definitely think on top of doing that, when you look at the market caps, just when Ben and I were looking at it, it's a very close competitor, meaning that, what was it? Etsy is 1.73 billion, where, 1.7 billion. I mean, to pay basically a premium for a company that's 1.62 billion, it's nothing to scoff at. They really thought about this decision. It's not easy to give up that much or basically take on that much debt to acquire a competitor, but they're serious about it and they think it's going to really help grow their top line and ultimately their business.
Yeah. And what is that now? I guess it's a tenth of Etsy's market cap now, I guess. But I was reading through the press release. They paid it with all cash.
Yeah.
So that's pretty sweet. So they start getting immediate benefit to the company, no debt at all. Actually, It was just full cash, which I think is a brilliant move. A lot of companies, when they're trying to do acquisitions, I tend to see like a mix of equities and cash. I don't like the idea of using the company's stock as cash because I don't know how that's going to influence the price. Like, cause they could just liquidate it. I would rather them have just used cash.
Yeah. And it's also scary when you do something like that, you're basically using debt to acquire more debt. So it's when you're starting to get in those multi-derivatives markets. I mean, not to call out investment bankers, but a lot of times when you see them do that, they basically, what's it called? An over-leveraged buyout, when they buy a company and basically start selling off the parts. So they're basically hollowing out the business as they acquire it. So basically they're taking a loan against the business they own or they're operating. They buy another business, and then in order to finance the debt, they just start ripping off, like, we're just getting rid of the engineering department, cutting that in half. We're getting rid of the procurement department, we're cutting that in half. We're getting rid of all overhead. Like, they just start, like, destroying a business from inside out. And really, instead of propping up a great business or a good business by acquiring another, you're kind of just hindering two businesses in doing that.
Yeah, that's an activist investment strategy. There's a few investments. Maybe we should list that somewhere. That would be an interesting episode actually to talk about activist investors. Like, that's the opposite of a Warren Buffett, where you go in and you're just like, hey, I want to buy your business, but just keep doing what you're doing, and then he walks away.
Yeah, definitely.
Activist investors, they come in and they're like, oh, you should be issuing a dividend, so we're just going to fire everyone until you have cash out. It's brutal. It's actually a sad thing, to be quite honest.
And it's funny. I mean, Warren got a lot of flack, even just from his own shareholders in the last year, because obviously his shareholders aren't stupid, or the majority of them really know financial markets, especially the ones that were on the Zoom calls, the famous Berkshire Hathaway shareholder meetings. But a lot of them were complaining because he had, I think, 113 billion in cash. And a lot of people like, just throw it in an index fund. Like, you don't have to have it on cash. Obviously, we know how much money we're printing. Like 40% of the US dollars were printed into oblivion. But Warren's not stupid. He knows that cash is valuable as an asset on the sidelines. Yeah, he doesn't get the benefit of growth. But when the market inevitably reverts back to its mean because money printing slows down, or just basically the stock evaluations, all of them across the board, crash down to normal levels or crash overall, Warren Buffett's going to go on a fire sale, and he's going to be buying everything at a discount. So when everyone was laughing at him with having how much cash he had on the sidelines, I know, Ben, in our recent newsletter, the Warren Buffett indicator, normally it goes 100% is fair, 70% is undervalued, 130 is way overvalued. Right now, the Warren Buffett indicator with all the metrics and formulas is over 200. So that just goes to show you how vastly overrated and overvalued the stock market is broadly. So Warren's just getting ready to go shopping, and he just has a bunch of cash on the sidelines to do so.
Yeah, and he will shop. I mean, whether it's Warren or someone else, they're going to go shopping. I just think the market is ripe for the picking once it kind of collapses a little bit.
For sure.
I don't think that's too far off. Okay, so let's take a look at what Depop is. Then we'll kind of go into what it looks like in the overall portfolio of the company, and then let's take a look at, I guess we can take, Chris, do you want to look at an overall, like my stock evaluation, like snapshot with the charts, or do you want to do the 3-statement look?
Let's do the 3-statement look. Let's change it up.
Okay, cool. We'll do the 3-statement look, go to the sort of like looking at the charts, and then we'll do the overall valuation at the end. Does that sound good?
Definitely.
Sweet. So Depop Synergies. So this is now a company that's going to be immediately benefiting the company. And I was reading through the press release, and based upon how sort of Depop's financials are set up, it will be accretive or beneficial to the top line. So the Etsy will overall be seeing a revenue benefit, but it may be dilutive to the adjusted EBITDA just because it's still in a growth phase. So the EBITDA number will be a little bit lower than what the average sort of like Etsy margin would be. So if you're looking at the company, you're like, oh, the EBITDA is not very good. That it's just by design. It's the way the company's operating right now. It's still in a growth phase. You kind of have to spend money to make money when you're talking 100% revenue growth. So yeah, just a note of caution.
Yeah, and for our listeners, EBITDA stands for earnings before interest, debt, taxes, and amortization. I believe that's what it is.
Yeah, EBIT. So earnings before interest, taxes, depreciation, and amortization.
Yeah.
We could do we could do another financial refresher one of these days. I feel like we did a key financial ratio, but maybe we go through financial terms.
Definitely.
There's a lot of terms out there that are mostly just acronyms. So, okay, Depop Synergies. Let's take a look at this here. So the GMS, that's gross means sales. And that is, it's not revenue. That is sort of the transaction volume that's going through the platform. And that goes 1-to-1, it looks like, with over 100% year-over-year growth. So the revenue is growing with the sales, and we definitely like to see that. So like I said, there's, as of 2021, 28 million users, and the 2020 revenue is 70 million. Again, 100% revenue growth. I mean, that's brilliant to see that. I think anything double digit is great, and then triple digit is brilliant. Likely unsustainable, but as long as you can kind of keep that train rolling, investors will be happy. So this is a term that I really liked here, or I guess stat, is the number of sellers that are also buyers is 74%. That's awesome. I think that's a really, really good statistic to keep an eye on if you're following Etsy, for both, I think Depop and Etsy, to take a look at like who is selling and also using the platform, because to me, that is a really, really sticky model where you have someone who's making money and maybe that's their livelihood, or it's a side gig. It doesn't really matter. It's making them money. And then on the back end of it, they're spending that money in the same app. So you're sort of getting the double-sided tape there, for both sides of the cash flow.
And Depop loves that. They get, like exactly like you said, they get both sides. So, you're selling your products, and then all of a sudden, basically, even if you're having money, I don't know if they have an account or if they're linked with PayPal, I'm assuming something like that, but you just stay on the app and you're like, oh, well, I got paid money. Now I should keep using money. So in turn, they're getting the fee, the listing fees, they're getting all those different things continuously. So they like that, keeping their users all in one place.
Yeah, and it's zero friction. So let's say you bought a shirt on Depop. I bought a shirt from Chris. I like it, but it's time to refresh the wardrobe for summer. I sell that same shirt in the same app I bought it. I think that's just an awesome, just recursive like life cycle. I think that's really a brilliant model. It's how GameStop was making money. They were making most of their money on like used games. Mm-hmm. Obviously, I don't think they're not truly doing well, but they took advantage of the stock run up.
For sure.
We do another episode on GameStop too.
GameStop and AMC for sure.
So last slide that I kind of want to go through for now, we'll come back to this after the valuation, but the Etsy brands. So Etsy Marketplace, obviously the lion's share. One thing to note is the Reverb and Depop revenue are not going to be in the, I think, 10Q nor the 10K. They exclude Reverb a lot, which is interesting from a lot of the metrics. That's just something to look at when you're reading through the 10Ks or the investor presentations. There'll be a little footnote, without Reverb or without Depop. Just be noted of that. Reverb is basically like a used instrument brand. It's for musicians. So it's sort of like an Etsy or Depop for musicians. I think it's a really cool business model. But it's a small contributor to the overall revenue profile. But this is really what it looks like, and you might not be able to see it. I don't know if anyone's challenged with colors. If you are, I will definitely rework a different one of this. We can do grayscale if we need to. For Depop, you see that 70 million, that's big. I mean, if they continue to grow, I think this chunk is going to grow larger, and we'll see a little bit more red. So you've got 19 million from Reverb, 70 million from Depop, and then the stack starts to grow. We've basically just got a bar chart here for our listeners. And then Etsy services at $423 million, and then Etsy marketplace, $1.303 billion. So the marketplace sort of mandated fees, they're making all their money from the things you just can't escape. So despite fees, people don't usually like fees, but they keep coming back is what I keep seeing from this. So Chris, any thoughts before we jump to the 3-statement look?
No, let's give the 3-statement look a go now.
Let's do it. So let me go. I've got a lot of tabs open here. So this is an unpretty spreadsheet because all I did was I basically just copy and pasted from the 10K, and I wanted to just show some key numbers here. So the first statement we're going to look at is the income statement. Just a refresher from our other episodes, you've got traditionally 3 statements, but they can be called different things. Like for Etsy, they called it consolidated statement of operations. For this, it's the income statement. It could be, I don't know what else they call it. Revenue statement. Is that real? Maybe. So looking at growth here, I'll read through it, but again, I'm still building my own competency with just like sort of the 3-statement look. I don't usually go line by line, but I thought this would be a good time to do it in real time. So looking at the growth of the key revenue drivers, marketplace and services, we are tiptoeing into the triple digit on services with 88%, super close to 100, which is incredible. And then the marketplace is growing at a clip of about 120%. That's a good number to see. What that tells me personally, when I'm seeing revenue growing at 110%, gross profit growing at 130%, and we're looking at net income growing at 260. I didn't look at this before this episode. 264% is brilliant to see. And what that tells me is Etsy's not done growing at all.
It also means they printed too much money, but we won't get into that.
They did, but it's more than the money that was printed.
Exactly. So, they're overcoming the weighted average cost of capital, basically.
Yes. And
one of the few companies in this environment that's doing that.
Yeah, and we'll talk about weighted average cost of capital. I use a number that I just found online because I just didn't want to do the brain damage of trying to calculate what the true WACC is for the company. I'm having a tough time doing it, and maybe that's a third episode we can take a look at, is calculating the weighted average cost of capital, which is really what I use for my discount rate in a discount cash flow model. So income statement really looks good. What am I concerned about? Not much. Chris, honestly, I don't know what the provision benefit for income taxes is. It's negative. I'm just going to flag it.
I don't remember that either.
It may be negative by design, like that, the fact that it's in parentheses there. So I'm not going to dig into that too much. I don't really, we're looking at expenses here. So let's just move on. All I'll say is just like the revenue is growing at a tremendous clip. Profit is growing. If you can grow the profit in a higher margin than revenue, I think you're doing something right. So this is pretty impressive to see. Want to do balance sheet?
Yeah, definitely. Or actually, I'll do the cash flow statement because I had a couple things that I wanted to know.
Please.
If you want to do the balance sheet, and then I'll do the I can do cash flow right now.
Were you looking at my spreadsheet or the 10K? Because I can pull up the 10K.
I was looking at basically like similar to your Excel sheet.
Okay, like this?
Yeah.
Cool.
So I just something that I wanted to note. So I was doing a huge comparison year over year. Obviously, I was looking at, as most people were, how the pandemic affect their business. So when you look at, I think, oh yeah, so 20. Yeah. So when I was looking at free cash flows, I think I don't know if you have it written in here. And anyway, so they grew their free cash flows from 2019 to 2020. Obviously, the pandemic helped Etsy at least because everyone's staying from home and ordering things online. They grew their free cash flow in 2019 from 189 million all the way up to 670 million. So that's more than 3.5 times their the growth of the free cash flow, which is just absolutely astounding. That is awesome. It's very tough to do that.
Right here. I pulled it up from my spreadsheet. I just moved to the other tab right here.
No problem. So the free cash flow, like I said, they grew from 189 or 190 basically then with the rounding up to 671. Like I said, that's more than 3.5 times growth of their free cash flow over the course of just a year. So it's just absolutely phenomenal. They did take on a little bit more debt in doing so, obviously with the acquisition of Depop and stuff, but nothing that puts them in a dangerous level. They're still generating, and even trailing 12-month average, they're up to 787,000 or 787 million, my apologies, in free cash flow. So they've grown an additional 120 million in free cash flow in just the, in the gap basically between January 1 to December of 2021, in just that like 5-month moving average, basically, they were able to grow it even an additional 120 million.
Very cool. Yeah, the free cash flow, I love to see that. And this was very clearly a pandemic resilient business because at the end of the day, like folks probably, I mean, not probably, they certainly lost their jobs. People were working from home. You either had more time or you had less, depending on your situation, obviously. But I think for folks who had more time, it was an opportunity to sort of build assets for yourself. And I think Etsy is a frictionless way to do that. And it shows.
Yeah, if you want to go back to that sheet one more time, sorry to.
Yeah, which one?
The one that you were just on.
Yeah, just the tab.
This one. Yeah. So also another thing I wanted to make note of, when you look at the earnings per share, it's line 19, row 19.
I'm gonna jump one more time. Sorry.
No problem.
I just want to show this because it's distracting. This is my less distracting version of the same spreadsheet.
All right, sounds good. Yeah, so when you look at the earnings per share, I know Ben highlighted that on row 19. When you look in the first few years, obviously it's showing negative earnings per share. They were still in the growth phase. Then all of a sudden they hit 2017 and they're getting 66 cents per share, 2018, 61 cents per share, 2019, 0.76 cents per share, and then 2020, $2.57 per share, earnings per share. That means that they're making a ton of money per share. So obviously this Depop acquisition just makes sense. They were getting so much cash that they need something to do with it. So they either need to reinvest in the business by, improving infrastructure, whether it's IT support, their website, whatever it may be, hiring more people, growing their logistics warehouses, whatever it, or even they don't really, I guess, have warehouses, normally person to person. But yeah, just acquiring another business to basically use this cash in order to do something for their business. So that's phenomenal. I mean, that growth, like you see, it's kind of like flat, they're in the growth phase, they spike up, they kind of level off, and then the pandemic's seen their growth surge, and now they have all this cash that they want to
I'm just looking at that revenue more than anything, honestly. It's going parabolic, which is always a good sign for a business to start to see that breaking the trend line. Because they were below it for a little while, and then they really, really spiked up. I mean, that's really impressive. I do want to go to the balance sheet, to your point, and seeing, because I do have a summary of key financials and key financial health metrics, but we'll jump to that after the balance sheet look. I just wanted to take a look at where they were sitting on for cash, because they acquired Depop in 2021. So we're not going to see any benefit yet.
At least not in these sheets. Yeah.
When did they acquire it? June. Okay. So the statement came out June 2nd, 2021. So we're not going to see anything. We're only looking at 10K 2020.
And even their 10Q was issued on May 6th of 2021. So it's not even in the 10Q.
Yeah, I have all their reports here. quarterly. Yeah, that was May. Yep. Yeah. So we won't see any benefit. So which is good. So if it looks good now, it's going to look better later. You're adding 70 million to the top line. That's great news. So cash. Okay. So they grew their cash in 2020 by 180%. That is exactly correct, Chris, what you were saying. They have too much cash and don't know what to do with it. So it's looking like they whatever cash they basically had on hand. That sounds about right. They probably have an excess cash now after Depop. They probably still have more cash on hand than they need.
Yeah, and like I said, we also saw in the free cash flow they grew an extra 120 million, so that's probably not even factored in. It's not factored into the 2020 numbers because that was from the quarterly report of the trailing 12 months.
And that's free cash flow. That's after like liabilities and expenses. Yep. So this is pure cash sitting in their treasury that they can just send it. So awesome. This is a great number. This means that they can buy Depop. So this is like a look back in the past. It's like, oh, what am I going to buy if I'm Etsy? What am I looking at to see if I'm concerned?
Total
the cash is a really good number. What are you looking at?
Total current assets.
Yeah.
Or total assets, the bottom line of the assets column, basically.
Total current.
23, row 23.
Oh yeah. But that's an additive number.
That's true.
It's just taking in that. So, but that's a good number. I mean, it's a good number to see that they have a ton of assets, and let's see what the total liabilities are. Total current oh man, they're good. I mean, look at them. They really manage risk. What this tells me, just looking at the total current assets. Thanks for pointing this out, Chris. Assets versus the liabilities. What that tells me is they're managing risk at the end of the day. So this is probably a very good CEO looking at opportunities. Builds up that cash reserve. And even though they're growing at an enormous clip, I think it's easy to kind of sit on that cash and just be really, really comfortable. But he's like, you know what? Let's pull trigger. Cash is cheap right now. Let's do something. And they're not even taking on debt. They're just using cash, just greenback free money.
Yeah. And businesses are definitely seeing it too. With all this money printing, they're seeing cash, even though it is an asset, quote unquote. They're seeing it as a liability. If you're holding too much of it, it's the currency's devaluing, so things are getting more expensive to buy. We're seeing it in lumber, seeing it in steel. I know Ben and I mentioned that in the Tesla episodes. So it's, waiting too long could almost be just as detrimental as pulling the trigger too early. You know what I mean? If not having enough cash and over leveraging yourself is bad, but waiting too long and having too much free cash is a bad thing. There's obviously special examples for everything. Like Warren Buffett doesn't need the money. His businesses are just deploying their money printing machines that they can deploy cash as needed. They can pay for overhead. They can acquire things at the rate that they see fit.
Agreed. So let's just take a look at total liabilities. So I was just highlighting red. So for anyone watching me kind of like play around, I'm just marking off things that are like an expense to a degree or a negative item, an outflow to a degree. So the liabilities will be cash out. But again, it really looks like they're playing it pretty safely, where their assets are comfortably over the liabilities. And we'll see this in the financial metrics. I'm going to jump into that. But although those numbers are growing, I'm not concerned, because when I'm looking at, I look at 141% growth in the current liabilities. I would be worried if the current assets were going down, or if it was a number very similar to the liabilities, and it's not. I mean, we're well off. It's several multiples off. So I think it's a really healthy balance sheet, Chris. We've got really strong cash position that will obviously be smaller now that we know the future, and probably was a good decision. So sorry guys, jumped ahead there. I do want to jump down to the key ratios. These are just like growth metrics that I'm not really going to focus on. I just want to look at current ratio, quick ratio, and debt to equity. Looking at the current ratio, Warren Buffett usually likes greater than 1.5, but not too much higher. What that means is there's more cash, right, coming in. That's the current assets over current liabilities. Yep. So with this being in an average of 4, what that kind of tells me is that there's cash that probably should be spent somewhere.
Yeah, I think Warren normally likes 1.5 to 5, because if it's greater than 5, I think we were going into exactly what you're saying. You have too much cash and you're not deploying it to help grow your business. You're kind of wasting it. If it's below 1.5, you're at a point of over leveraging yourself, or you could be in danger of over leveraging yourself and basically putting your business out of business by not deploying capital properly.
Exactly. And those are like, I guess, quick and dirty ways to look at it. Like I could look at that and be like, oh, that's too high, but I'm not on the board of Etsy. I don't cover this company as like an analyst. So this is like me looking at it quickly. So obviously take these numbers with a grain of salt, but although it might be high, there might be a reason for that. Like you'll also on the other side of that coin don't want a CEO just spending money. And as Peter Lynch would say, diversifying. You've heard of diversification, but diversification is always a real and present danger when there's easy cash to be made. So this number, this 4, I'm looking forward to seeing what that's going to be in 2021. So after their results, I guess in February of next year, right? I guess was when they'll do their next 10K. Yep. So maybe we do an update on this. I think that's going to come faster than we think, which is weird. Debt to equity, Warren Buffett again likes 0.5, which is honestly pretty uncommon nowadays that I've noticed with most like tech companies. I think because money is so cheap and the interest rates are so low, companies are going out on a limb to take some debt and really just like accelerate time in terms of getting cash flows and discounting their future cash flows. So it looks like Etsy is managing their money really well. I'm pretty impressed with how their balance sheet is super strong. They've got a ton of cash. They acquired Depop with cash. I mean, that's brilliant. They very well could have just taken out a loan and paid like pennies on the dollar, but they decided to use that cash and start getting a true revenue benefit immediately, as opposed to sort of diluting their overall earnings with unnecessary interest. I mean, even that small interest could add up. Maybe they think the interest rates are going up, but they have the cash and maybe this is the best place to park it. So Depop at the end of the day, I think is going to do better than a bond, looking at 100% revenue growth.
For sure.
Cool. So what did I want to cover next? Do you want to look at the valuation?
Yeah, we can do the evaluation real quick, and then we'll get into the risks, and then we'll do final assessment maybe.
Let's do it. So again, plug for us. This is our TAI tools page. So if you go to theamateurinvestors.squarespace.com, click the little ribbon up here, go to TAI tools, and then go to the buy. We made a really, really simple tool. We made 3 actually. One, if you ever want to play with compound interest, that's a very fun game. If you're a nerd, I love it. It's fun for me.
I agree.
And then for capital gains tax calculator, if you're ever comparing buying an equity versus the selling, it sort of takes into account, it does exactly that. It takes into account the impact of the capital gains tax and the friction of the capital gains against your potential profit and compares it. So it shows what would happen if I were to sell equity X to buy equity Y. And it shows that overall, what do I have to return to break even on the capital gains sales tax? But anyway, click buy, go to the stock valuation calculator, and I plug in my nifty info. So I have already done this, so you don't have to watch me do Control V, but you type in the ticker. This is key because this will actually drive a lot of the behind the scenes metrics. This gets all the real-time stock info and anything tied to basically a Google Finance real-time thing. So just essentially just like the stock price is very important towards driving this. The discount rate, I really just looked up the weighted average cost of capital for Etsy. And you can adjust this as you see fit. I think you really want to assign some numbers to this if you can. I looked over the calculation for it and it looked sensible enough. But the discount rate is really what drives the overall valuation. So definitely either look at the WACC or try and come up with the discount rate that makes the most sense for you. There's a lot of different ways to do it. I went with 8.5 for this one. The long-term growth rate, I plugged in the current 10-year treasury yield, and that is 1.47. There was a small drawdown last week on treasuries, despite interest rates potentially hiking. So I plug that in. I plug in the free cash flow history, which we did in the other sheet. Plug in a few assumptions here. We were growing revenue 100 plus. So these could be aggressive. They might not be. Really, what this is numerical gymnastics. You can adjust these numbers as you see fit. So if you're a little bit more conservative, if you don't think 25 is reasonable, we can go to 20, we can go to 30, and then we can go to 40. So what do I actually think it's worth? I'm going to go back to my initial assumptions because I think the company is going to keep growing. I think self-made sellers is a really, really lucrative business. I think we are continuing to evolve past storefronts. In my opinion, I think Etsy only will continue to grab market share as the world goes digital. And although I don't think retail will ever go away, like I think people like to shop. It's a lot of fun. It stresses me out, but some people like it. I don't think it's ever going away, but I think there was going to be this push towards digitization of markets. And I think Etsy is a unique brand. It's recognizable, it's sticky, and they're continuing to grow. That's why I'm pretty comfortable with these numbers based on how much they've been growing. And I think it's still pretty conservative. So the number I get is about $3.90 per share. And at the current market price, which I'll flip back, I think you're going to see a 22% return. So let's take a look at the stock price really quick and see where that sits. So this is, I was playing with the number before, but what I have here is 389. So pretty close to, I guess, what I was playing with this before. So the current price is 165.82. And the intrinsic value that we get is 389. So I'll just stick to that. And then if you were to buy it at 165.82, our estimates say you'd have an IRR or an internal rate of return of 22%. And looking at the price of the market, you're probably going to be beating the market if you buy. I think that's a really, really good return. Do I think it's cheap? No. I don't think this company's cheap by any stretch of the imagination. That's one thing I will note is the PE is close to 50, and the price to sales, I really like that to be as close to 1 as possible. I think tech companies are not at all close to 1. But because it's a growth business and money is cheap and money continues to be printed, you sort of have to pay and go to the extreme side of the risk curve. So if you're comfortable with Etsy and you like some of these numbers, this could be a good buy. But again, do your research. I like the business. I think it still has a tremendous amount of upside. And looking at how it's been breaking out above the trend line, I think Etsy has a long way to go. And it seems like they're continuing to reinvent the business. So that is my overall thesis here.
Yeah. I'll add my risks. So I actually did a comparison of PE ratios as well.
Do you want to share a screen or just talk through it?
I could just talk through it. So
cool. Let's go back to
comparing PE ratios to obviously the big tech companies, Amazon, they're at 63, Google's at 30, Apple's at 28, Facebook's at 28. I didn't leave the decimals, but yeah, so obviously with Etsy sitting at 48, Amazon's is quite high, which I didn't really look into. I just thought it was interesting. They're at 63 right now. I just think because cost of capital is so cheap and people just need a place to plug their money. They know Amazon does really well. So I just think it's kind of unbalanced across the FANG stocks that people have just kind of overbought Amazon, basically, is the way I look at it right now. But I guess if you're looking at somewhere between 48, which is, would you rather buy Google, Apple, or Facebook, or would you rather buy Etsy? So you kind of have to look at it in terms of, like, they're already big companies. Etsy probably has a lot more way to go, but their PE ratio is higher than theirs, which is just more risky than them, basically. With that being said, I was kind of looking through their 10Q that was given out on May, and I thought it was very interesting, a lot of their risks. I thought they were kind of spot on a lot of things that they said. So one, they said it's no secret that Etsy definitely saw explosive growth in part because of the coronavirus pandemic and was able to capitalize on the increase in online sales. I think they hit the nail on the head. That was one of their first risks. Another one that I thought was very interesting, and that was more recent or more recent events or current events. It says can experience a technical disruption from an IT standpoint or technical platform. I thought this is a smart thing to add. I think this is kind of just compounding on the idea that the Colonial pipeline was hacked, also on top of the meatpacking industry that was recently hacked as well. So they're not stupid. They realize that they could be hacked like any other retailer or any other computer company or tech company. So they just realized that probably they need to invest in security along with some of the money that they've invested into their business, not just buying Depop, but probably like, hey, any old IT platforms, we need to bring them up into new generations and new softwares. Another thing that I noticed that I thought was interesting, they said they are very reliant on third parties like Google and Amazon for web hosting services. So while they do rely on bigger companies and they basically are a customer of those companies, maybe they didn't make note of it, but potentially investing into their own servers, that in the case of Google or Amazon shutting them down or some issue occurring, having a backup's always a good thing. And
yeah,
then,
that one, I was looking at that and my initial reaction was like, oh geez, like they being reliant on a web hosting service. But at the end of the day, they're a customer, and they're probably a really large customer of Amazon or Google. And I feel like the larger companies probably don't have that much leverage over Etsy because they could just switch. I feel like they'd much rather just provide good service. Like you said, like having redundancy is good, but in terms of like the larger company influencing them, I'm not worried about that aspect of it personally.
Yeah, for sure. And then the last thing, I mean, this is pretty much like any company law, tax limitations, debt repayment, laws and logistics. If they were to expand to outside the U.S., Ben, you would know better than me. Wasn't seeing anything that they do sell outside the U.S. Do you know for a fact if they can sell outside the U.S.?
I don't know for a fact. But
Okay, maybe they're in North America because I think they do stuff in Canada and in Mexico, but I don't know if they're in like obviously Europe or Asia for sure. So they were, I guess that was just kind of a note, like logistics and laws that they were to expand outside the U.S. But I didn't know if they already had a basis there or if it would be a full-on expansion to other continents.
They do. Well, they say Etsy payment. So they're saying Etsy payments is available in 45 countries and 21 currencies.
Okay.
But I don't have the one thing so we could always update this, I think, is to take a look at like what the composition of sales look like around the world. Like just because they offer it doesn't mean
it's a large portion. Yeah. And I think that's okay. It answers what I'm trying to think. They're saying expanding outside the U.S., like further expanding business that they do
predominantly U.S. for sure.
Yeah. So basically, I guess with all these evaluations, I'm not saying I don't like Etsy. I just think they're kind of overpriced right now, and I think a lot of the market is. So Etsy's kind of a cool one there. It's interesting. Even when I was looking at their stock price, I think they spiked up to 250, and it's since fallen to 160. What is it right now? 165.
I'll go to Yahoo Finance in the background, and we can look at historical.
Yeah, but within the last couple months, I know in the beginning of March they were up to like 250 March 1st or around that time frame, and they've since fallen down to 165. I guess I kind of want to see what Depop is doing to their top line and how it's affecting their free cash flows. So I'll have a better understanding next quarter. So right now it's kind of a hold and wait and see. I don't own any Etsy currently, and I don't planning on any owning right now. But if they were to drop further, I definitely think that as a buying opportunity.
Yeah, I think that was a really good, I guess, overview of your position. I agree with you. I think it's probably prudent to see what the overall impact would be on Depop. Like looking at the company and running the analysis, I was like, maybe I should put a position on because I think given the drop, I think it could be attractive. But like you said, like it is expensive from a PE standpoint, but looking at the broader market, like the overall like company size is rather small. And thinking about just how fast like Dogecoin went to $100 billion with like no fundamental value, Etsy has a really good product. And so that's something I will say, just like a disclaimer, looking at it for sure. I'm a huge fan of e-commerce. Those have been, I think my best trades have been Shopify, Amazon, Square, just like getting on board with the e-commerce. I really like that play. It makes sense to me.
And I will make one more note, and this is kind of to add to the position. Yeah. I think I don't know how to describe this. So while Jeff Bezos is still on the board, he's chairman of the board of Amazon, and like he's still there. With him pursuing other interests and trying to expand Blue Horizons, it kind of seems to be the space race. The space race between him and Elon. Oh, that's true. Someone bought the I think it was 1.5 million to be next to him or something like that on the flight. But I in a weird way, it's just like when you see these legacy CEOs leaving companies, like I don't want to say the company gets complacent. I think the guy that the president of Amazon Web Hosting Services is now the CEO of Amazon, or taking over in July at least. I think that's when other companies can come in and kind of like try and take advantage of like seeing as a position of weakness. You know, like Jeff's no longer running the ship. Yeah, he's there. Yeah, he's giving guidance, but you know, the new guy in the block is always going to say like, I'm king of the castle until you're not. So I think it's an opportunity for a lot of these e-commerce or online shop stores to be like, to kind of put it up to Amazon and say like, let's see what you got. Yeah. It's one thing to say that they got there and they're not going to disappear overnight, but it's another thing to see what their new CEO is going to do in terms of acquisitions, in terms of how they're going to grow, in terms of how he's going to expand on what Jeff's done.
Yeah. I think it's a good point. I think people will continue to find these niche markets to operate and beat out, I guess, them not, whether it's regulatory or just true capitalistic competition. I hope to see that exist because right now we're not in an open and free market for sure.
Definitely.
So to your point, Chris, yeah, it went up to 233. Yeah, wow. It dropped quite a bit. And I'm not sure exactly what drove that. But
actually shrink the window down to the last 6 months. I think it was even higher than that. So I think with a smaller time scale, it might. Yeah, 244.
Yeah.
That's interesting. So yeah.
I don't know what happened there. We could take a look, but overall, I'll just kind of stop sharing and just go back to the valuation. I think the company has really good fundamentals. Again, like to your point, Chris, like the risk, I guess, is that the risk that you're worried about most? Like I would say for me personally, I think in terms of near-term price action, it could be the valuation. Actually, I don't think it being overpriced will be a consequence in the near term, just given the sort of like macro environment. It is a long-term risk. I guess my question to you would be what risk jumped out at you that you're worried about with Etsy, like despite price, business-wise?
I think so. My biggest one is the reversion of as the world starts opening back up online. I think the online shopping is going to go down, and then we're going to see the money flow into vacations, into cruises, into airlines. So I think a lot of the money is going to be flowing into travel. More so than online shopping. I think people have been cooped up for so long and they just want to get the heck out of their houses. So the last thing that needs more crap in their house to keep them there. They want to do things. They want to experience things. They want to go on adventures. So I just think that the money's just going to flow out. And while it drops, that's an opportunity to buy. That's just kind of how I see the macro environment.
I like it. I'm bought into that. Honestly, I think I'll buy into that because there's a finite amount of cash at any given moment. I guess it's like an electron. You can only know if it's speed or it's position, not both. But yeah, I guess I think you're right. I think people are just like really hankering to travel. You're seeing it with the rental car shortage. You're seeing it with just like hotel prices spiking. Airplanes are filling up.
Gasoline prices going up. Yeah. Like,
I wouldn't be surprised if we see like triple digit like barrels of oil.
Yeah.
This summer,
oh yeah.
For sure. What are we at? Like, we just broke 70. I did a report on it. I think we just broke 70. I think we're at like 70, 91 cents or something.
Yeah, for sure.
Down from up from negative, which is crazy. So
the futures options traders made a ton of money when barrels of oil went negative. They were like,
and lost too.
Yeah, exactly.
No, Chris, honestly, I enjoyed this episode. I hope you guys enjoyed it as well. So again, I'll just kind of jump back really quick. I always hate doing PowerPoint, but I just have that little summary here. We'll jump back and then you can see us again. So what did we come up with the valuation? We're looking at intrinsic value per share about $3.89 with an IRR of 22%. And again, for our discount rate, we use 8.5. So a very attractive business. I'm going to back out again, but like Chris and I said, the valuation might be a little bit steep right now, just given its current earnings levels. You can kind of run a valuation on a couple different metrics. Looking at the DCF, it's a pretty attractive business. So if you like it, want to have a position, maybe buy a little bit. With a lot of platforms, you can buy even partial shares or just sit and wait. I think Chris's analysis that the cash is going to flow out of these like growth companies and really out into consumerism. I think that's a likely thing that happens this summer is we start to see a bit of an outflow from markets and people get that cash to work and our GDP goes up or something. And that's a buying opportunity. So just keep your eyes out.
Yeah, for sure. All right. I think that's it for the episode. You want to wrap it up then?
Yeah. Like always, like and subscribe to our YouTube. Follow us every sort of social media that exists. We're on every platform that you listen to podcasts. Again, if you folks have any questions about finance, about Bitcoin, about us, or anything that you heard in our shows, never hesitate to reach out. We'd love to hear from you guys. We've got some big announcements coming up pretty soon, but more to come. I guess you'll have heard it on the day this releases.
This is the 16th when it comes out.
So okay, so yesterday. Very cool. Thank you guys for watching and listening. We'll see you guys next week.
Have a good one. Catch you later, everyone.
Bye.